Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything that you need to start your trading day. Good morning, everybody. Welcome to this Monday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick. On the show today, we are going to talk about the market's reaction to the weekend airstrikes in Syria. We're going to talk about, looks like we're just about, this is one of the bigger weeks, looks like, of earnings season. We have Netflix this afternoon. We had Bank of America already today. So we'll talk about the biggest earnings stocks reporting. We have a lot of ratings changes to discuss as well. A lot in the food sector. Costco getting an upgrade. McDonald's getting an upgrade as well. So a lot to get to as far as ratings land is concerned. And our guest today is Sean Emery. He is the co-founder and CIO at Avory and Company, author also of the marketmeter.com. He would join us at 8:35. Joel, what is doing this morning in the S&Ps?
Trading into green by 14.5 handles off the higher open. Stop short of Friday's high. That's our big level on the upside, 26.8050. Our current high, 77.50. You did get a little sell-off overnight, nowhere near unchanged. That was 57.25, 60.75. That is your pre-market low, also the daily pivot. Looking at Bitcoin, did get over 8,000 overnight and did take out Friday's high, but now futures are clinging to that $8,000 level, up 160 at 80.60. Crude peaks at Friday's high of 67.76 with a 0.74 high. It's down 89 cents at 66.50. Gold in the red, 1346.50, $1.40, silver in the red too. Dennis, how you doing on this chilly Monday morning in the Motor City?
Cold, yeah. It's been a rough winter, Joel. We're ready to get out of this winter months here. I think eventually we are going to start to get warmer. We had a little taste on Thursday, what it can be like to have spring, and then obviously we got blasted, not quite with a winter storm here. We were just warm enough to avoid that, but we got blasted that almost where I was considering building an ark because there was so much water everywhere around my house. Amazingly, I got no water in my house, but man, there is a lot of water out there.
I will say,
a lot of rain.
I will say that yesterday was probably the worst April weather day of my entire life. It was cold and rainy the entire day.
Horrible. There's ice rain at us in the morning. I mean, I look at the trees and there's all ice on them. I'm like, what month is this? What happened to global warming? I thought it was supposed to get warmer.
No.
Is it global colding? Maybe Trump was right.
All right.
I do believe in global warming. That was a joke. So, in any regard here, we'd like some of that warmer weather right now because this has been an awful long winter. And I'm pretty much, I'm an Oilers fan. I saw this stat coming out of Edmonton. They broke a record for 167 consecutive days of at least zero. So meaning that we got down to at least zero. So basically 167 days of freezing temperatures in Edmonton, Alberta. That's like half a year.
Yeah.
Long winter. All right. They're breaking records in the coldest provinces or in the coldest cities there in Canada. So it's cold.
We got a lot to talk about.
Gas?
We got to talk about.
I haven't looked at natty gas that much.
No,
was it good? It wasn't even that good for it, eh? Didn't even do much.
Because it's solar. I guess the sun is still out. Natty gas. Actually, it did have a little bit of a move last week. I don't watch this too much. Someone was looking at it from the chat. It might have been Stargazer. I can't remember. And I said, well, you got a level of lean on that low of the move, 2.614. I don't know what the ticks are here, but it's trying here. Fourth up day in a row in natty gas. If you're playing it, 2.771. That is your current high. Let's see here. I don't see anything until 2.792. Too many decimals for me, though, to trade natural gas.
Let's jump over to the big news of the weekend, and that happened Friday night with Trump obviously starting military strikes in Syria. Spencer, give us the details of really what's broken down here in the last 48 hours.
Well, we targeted 3 sites in Syria. We hit them all. Trump sent out a tweet, which we were talking about it on the pre-market show. This went out Saturday morning at 8 a.m. that it was a great success, mission accomplished. So that was sort of like kind of the end of that, pretty much. I haven't seen any response from Russia or anything in the 2 days since. So I don't know what's going on over there, but we got together with our friends, we bombed some sites, and that was that.
Okay, multiple trades here that I see kind of unwinding to a certain extent, and here's the significance of it. People will come in this morning and say, we're sending missiles over to Syria. Why is oil not trading higher? Why are some of these defense stocks really not trading up? Oil is down. The USO is down almost 1% here. I don't have oil futures. I don't like to pay the price. So assuming oil futures are down here as well, Joel?
Oh, yeah, they're down 86 cents. And I think I mentioned it at the top of the show. You had Friday's high and the high of the move at 67.76. Little rally off the open took it to 67.74, and then it reversed course. But it's in the red by 86 cents off the lows.
We've been basically trading straight up all last week on fears, and this is obviously the oil trade, fears that we're going to start some war here with Syria, Russia, and this is going to get ugly here. And some people saying World War III. I don't see that materializing, but I think that Trump tweet where he says mission accomplished is kind of telling me like he was thinking more of a one and done here. Just coming in and sending some missiles over there to send the message that they wanted to send, and they're done. And that's why you have obviously traders who were buying oil last week thinking we're going to be going into potentially war times here again, saying maybe not. So obviously if the mission accomplished tweet is that if they are one and done here, well, now you have people who were playing it last week unwinding that this morning. So you see oil trading down. Defense stocks are there's not really that much trade going on in the pre-market, but I would not be surprised if you actually see these stocks tend to reverse here this morning, because I don't see, and this is very, very short term, because I don't know if I believe it's going to be a one and done. I don't know if it's just a matter of they just accept the fact that we threw a bunch of missiles at them and then that's it, or if there's going to be any type of, some type of retaliation. I don't know if this, is pissing Russia off, for lack of a better word. So we don't know what the repercussions really are here longer term, but short term, the market is applauding the action, obviously. And they're applauding the fact that we've been worrying a lot about Syria, and maybe it's not going to be as big of an issue for the markets as everybody thinks it is.
Yeah, I mean, and what right now, what the S&Ps are pricing in is that there's going to be absolutely no retaliation from Syria or Russia. And also, Mnuchin came out over the weekend and something about maybe slapping some sanctions on Russia today. So, I mean, this could be, hopefully this is the shortest war or shortest attack ever. I just cannot see some kind of retaliation not happening somewhere down the line. But you know what?
Yeah.
Right now, trade what's in front of you. SPUs are up 14. High of
oil's down.
Oil's
They're telling
down.
you the market right now is saying that this could be a one and done. That's what the market.
I sure hope they're right.
I hope they're right too. I mean, I told and we were worried. When we were talking Friday night after this, Joel, we're like, oh, we're starting a war here, and we talked about this on the show. So it wasn't like this came out of the blue. We even said Friday morning that defense stocks could be up ahead of obviously potential strikes in Syria happening here. So it wasn't like this was out of the blue. But because of the fact that they're one and done, I mean, Lockheed Martin's trading off a buck here in the pre-market, but I don't think I wouldn't be surprised if stock like that turns around and starts going red. I know NOC, they're also, I'm giving you a trade here, my opinion this morning here. But with oil trading down, it's already kind of spoken a little bit. So I know you've got some traders this morning coming in here and, anticipating maybe longer term that we are in a one and done. So there's could be a little bit of battle there, but these stocks start going red, look out below. On Lockheed Martin, and not that they've had run-ups or anything like that. They've kind of just been in consolidation station, but they're looking for information, and they're looking for information. Are we going to war? Is this going to be long-term? And the information they got over the weekend, I don't think that traders are going to love it. So that's why I think Lockheed Martin, General Dynamics, NOC could follow oil here. So with oil trading now in the red, I would not be surprised if these stocks go red as well.
Texas Linda makes a good point that it wasn't a unilateral strike, that we were helped by France and the UK. So it looked like it was a unified thing. But I want to talk about bank earnings, and boy, I'll tell you, part of the market decline on Friday was, where he's, going in a long weekend. But JP Morgan, Wells Fargo, those stocks did not react well to good reports. You've seen this before with JP Morgan. Big sell-off. I guess if you like to report, good opportunity to go long here. You made if you like it, made a low at 109.06, closed at 110.30. So if you're looking at a swing, maybe leaning on that low at 109.06 from Friday and see if we can get back. Wow, Friday's high was way up at 115. Wells Fargo got the beats too, and that is in a very precarious place here, Dennis. Sitting on the lows of the move, 50.81 was your low on Friday. And man, this stock is well below February lows, and its April 2nd low was 50.42. So this chart's not looking so great in Wells Fargo. But what Bank of America have to do today?
Bank of America reporting. Oh, I just had it on my screen. There we go. Bank of America reporting Q1 EPS this morning, 62 cents versus a 59-cent estimate. Sales of 23.1 versus $23.06 billion. So again, top and bottom line beats for the bank, and they're liking it a little bit this morning.
Okay, so here's my thought process on this. And this actually happened last quarter, what Joel was talking about. The banks rallying initially on good reports and then selling off all day. This exact same thing. I'm having deja vu because I think this happened exactly like this. The last quarter or the quarter before. But we saw these good bank earnings get sold before on this. So it's not, completely out of the blue that stuff like this happens. That being said, now I think, Bank of America really got hit hard. They didn't even report. So it's not a matter of like, Bank of America is going to do the same thing. They're trading up on the report and they're going to end up going in the red because there's now traders anticipating that because that's what happened on Friday. The market always tries to throw you a curveball. So anybody who was, shorting Bank of America ahead of the report saying, well, they're going to probably sell it off again or shorting it this morning, that could be the curveball the market's throwing you. It already sold off. I mean, it was trading up at 31.17. So it's sold off ahead of its report. It's already had its sell-off. Now, that being said, if all the banks go into a tailspin again, it's going to go into a tailspin too. They all kind of move together. But I would watch Friday's low. So you could have some people, off the bat that get spooked and saying, it's going to happen again. But I don't think as long as we hold Friday's low, 29.56, maybe there's a potential there that it could turn around and start going higher again. I know it's trading up. What I'm anticipating this as a trader is maybe get a few people selling it off the open again, just because that's what happened on Friday. But I think those traders could be in the wrong. I think you have a little sell off and then actually turn around and start rallying. So I want to see it hold Friday's low. That's the key technical point for me.
Dennis gave you some downside. I'm going to give you an interesting level to look at here on the upside. Thursday's low was 30.17. And so far, that's capped all the rallies here so far in Bank of America. So old low, old support could be new resistance here. And it's very important if you do clear that 30.17, I want to see this thing clear Fridays or Thursday's close at 30.65. So those are a couple big levels. Friday's highs way up at 31.17. But I'm keeping an eye. We got to clear this 30.17 off the hop, or you could be down there testing out Friday's low at 29.56.
Jump over to Charles Schwab. Did we hear their report here yet, Spencer? SCHW, they are due to report here this morning. They also sold off ahead of the report on Friday. A lot of things did sell off. I think the market was a little bit spooked on Syria, which obviously is regaining some of that this morning. Schwab earnings.
I didn't see them through yet.
Maybe it's 8:30.
Yeah,
sometimes they come later. Here, I'll just check what I do. Yeah. So we'll wait on Charles Schwab. That when they break, Spencer will come in with them. They are due to report here this morning. They're due to report on your calendar, right?
Yep, they are. But I do have JBHT in the meantime. JB Hunt.
I just want to say
let's do JB
50's your major support there in Schwab if we do go into reverse.
All right, JB Hunt reporting this morning, Q1 EPS of $1.07. That's in line with the estimate. Sales 1.95 versus $1.89 billion on JBHT.
There's no trades happening here yet. So this is still in price discovery mode here. I'll just tell you the bid, 112.21 to 115.20. So it's traded a whopping 25 shares out of 111.31. And that's obviously below where the current bid is here. So we're still trying to figure out which way JB Hunt wants to go.
I would call nearly matching ranges on Thursday and Friday. That would be your keys in this session, Thursday and Friday's high. 1467 and 1488. And then you have Thursdays and Fridays lows at 1199 and 12 and a quarter. So there are your bogeys here for JBH. 112 closed near the low of the session of 112.77, putting a little more pressure on that 112 level.
Let's talk about the TLT, which in the chat Gem12 is talking about as well, and this does jump out to me too. You've got the TLT getting killed here this morning. That is good for banks. If you look, some of the banks are trading a little bit higher, but not getting much of a bid because it's just the spooked, traders there from Friday. But more so when you see the TLT trading in the red like this, you start thinking, okay, well, market was again maybe gambling a little bit, on more trouble from Syria. TLT was up on Friday. And maybe that trade's coming off and unwinding a little bit in the bonds, but that also obviously means bad for your REITs, bad for your utility stocks, bad for your yielding plays. So when you see the TLT down significantly, I automatically think most of your utility stocks are probably going to be trading in the red.
All right, TLT, I mean, it's had a little bit of a rally here off the February low, but major resistance. You got to get clear 122.36 with a gusto before you can get another rally here. And boy, we are trading below Friday's low and Thursday's low. So this 120.50 will act as resistance. Haven't been under 120, folks, since April 5th. You had a 119.77 low.
And let's just talk, this will segue us into the ratings here today, which there are some significant ones, but just saying, utility stocks, weak, REITs, weak, usually food stocks too. When you see the TLT down, usually the food stocks will go in the red as well because those are more yield plays too. Well, there's going to be another reason that a lot of the food stocks are in the red because we got multiple downgrades in the sector here this morning. We got KHC Kraft Heinz, which is still on my buy radar because it's starting to come, it's starting to look more like a value stock here at 60. At 80, when I crunch the numbers, I don't see any value at all. At 60, it starts to look more attractive. It's still on my buy radar, but it's just been consolidating for so long down here. And I don't think the market's going to give you a chance to buy the bottom for that long. That's why I think we've still got more work on the downside for Kraft Heinz. Even though from a valuation perspective, it's starting to become attractive, it's never given me really a reason here to come in here and say, okay, I think the bottom is in. We're getting a downgrade here at underperform Credit Suisse this morning. The stock is trading down 54 cents in the pre-market. You got those double bottom like 59.48 area, 59.72. Let's call it just below $60. We start to take that out, then it gets more interesting on the downside. Also, and I'll let you come back and do the technicals on these two, Joel. SJM, which is JM Smucker, that is getting downgraded underperform at Credit Suisse as well, and it is trading down $1.35 in the pre-market. And then you have Goldman downgrading Dean Foods as well, DF to sell. So a couple of ratings here in the food sector, not looking good this morning for some of these food stocks.
Well, a couple things here. There is a move coming here in the KHC. Dennis, nice setup here. 59.48 is the low of the move. So really all bets are off on the long side if that's taken out. Several highs at just under $62. So if you want to buy it on strength as opposed to weakness, but let's see how it reacts today, right? This is a pretty big ratings change. So if this thing gets green or, it's down 15, 20 cents on the day, when a stock reacts positive to negative news, sometimes it could be a turning point. I've been eyeing this one too, and it's just tough to pull the trigger. We'll see.
Is Warren, it's still got to be a big Warren position now. Kraft Heinz. Do we know how much Berkshire Hathaway owns of Kraft Heinz, Spencer? Maybe we can do some dig in the background.
Top of my head, no, but I know he.
I'd be impressed if you knew at the top of your head. I was going to be impressed.
Spencer, come on.
So go dig into Berkshire Holdings. Maybe just go find out. I'm just curious as to how much Kraft Heinz they still own. So we know he took Heinz private obviously for a little bit there, then brought it back as Kraft Heinz KHC. But I'm just curious there.
Okay.
Consensus forward PE on that is looking around 16. So it's just, below a market multiple. But these food stocks have typically traded sometimes even above market multiples because they play defense there. But I like it. But, man, this setup here is telling me it could go lower yet, Joel.
Would you put it like a strangler? And I know you hate options and stuff, but
maybe you write some puts or something. You can maybe do that to enhance the yield. Maybe that's the play. But I don't know how much premium's in the food stock. So
probably not.
This is Nick Shaheen question here too. You go write puts on Google and Facebook, you get premium like crazy. You go right on Kraft Heinz. I don't know. At the 55s, can you get $1 for that if you go a ways out? Maybe.
Oh yeah.
I'm not sure.
Oh no, if you're right, no, I don't know. Well, it'd be interesting to
do a covered call? I don't know.
It's going to 55 or 65. We just don't know when, right? That's the problem.
This chart's telling me more 55, which is, I would have never, when Kraft Heinz was 80 at the beginning of the year, I would never thought I'd be down at 60 here now. So, this is something, I don't own any food stocks in my portfolio. Again, it's funny, the sectors, my portfolio, which I've talked to you guys about before, this is my invest portfolio, not my trading portfolio, is, a lot of biotech, a lot of different stocks, but not a lot of food stocks. So something that I'm underweight in is food and retailers. And at a certain point in time, maybe some of the retailers, although those all seem like value traps, the food stocks, so people still got to eat, right, Joel? Don't they have to eat?
Oh, man, you're giving me so many.
They're not going to get Amazon.
I
mean, Kraft Heinz doesn't have stores. They can sell this stuff on Amazon too, can't they?
You're giving me so many ideas here. You gotta, you just get.
Well, it's the point of the show.
Gotta be quiet here for a minute. Major support is Smuckers. I won't call it major, but you do have a double bottom at 118.65, 118.95, and also had a low in the lower 118 handle. So there's your support. Dean Foods is a lower moving stock, and boy, it is just had tight ranges. Well, it's a lower price stock here. So $9 is your resistance, and man, you have several lows all the way down to 861. After that, it opens up to 826. And I'm not going to necessarily be adding a retail stock to my portfolio, but Lisa is today. And
what's she buying?
L Brands.
You know what? I look at it and I want to do it too. I want to do L Brands, and then it's funny. Jeff Mackey tweeted at us when we when we were talking on the show there. Obviously, I think Joel reached out and was actually you were corresponding with L Brands, but you must listen to the show back a little bit there because he sent us a tweet on L Brands there because we were talking about Mackey giving him props for the purple crayon, and then I'll just go to the Jeff Mackey tweet there from Friday. It's funny. He says. Purple crayon explainer by request, and he does L Brands, and he CC'd me and Joel on the tweet. So proud. Hey Jeff. Versus he just saying L Brands. The chart is straight down. Nelson says in the corner. He's always funny. So stop staring because of the lingerie.
Well, her thesis is that it's pretty hard to buy your undergarments on Amazon.
And you know what? There's a point there. And you know what I like about it is the dividend safe? It got down here before, and I bought it, and I sold it way too soon. And it's back. I bought it at like 37 or 38 bucks, and I sold it in the low 40s, and the thing went to 60, and I was really kicking myself. And now it's back here at those levels. And this is a big level for $35. $35 absolutely huge. And it's the first time back down after being up at 62. I think there's a trade here. I think there's a tradable bottom here around 35. It takes out, starts going 34. Maybe give yourself a buck. But I think there's a potential setup here. It's in the 35 handle even this morning. So I think it tests it. Maybe you can get in the lower 35s and maybe try it for a bounce. And, if it doesn't work, Jeff's right. That trend is ugly, though. And the trend is down. So, that's what he was pointing out to us on Twitter. But, there is that 35 is a big number from back in July. So I love the dividend, 6.71%. I'm not sure if that's safe, but holy cow, you get 6.7% on your money while you wait. That's not bad too. From a fundamental perspective, it looks pretty good. But again, I don't know. People just aren't into lingerie anymore. I'm not sure. What else does L Brands own? Is it all just Victoria's Secrets pretty much? Is that like the bulk of or is there some other businesses in there? Got to be some other businesses.
Yeah, they have other stuff.
Is it the limited, or is that still around anymore?
No, it's limited.
Yeah, that's what it is. They own Pink, which is like it's like
pink stuff.
La Senza, so that's the same lingerie.
No, they have a couple other brands.
Bath and Body Works.
Bath and Body Works.
Yep. Lisa mentioned that too.
And to answer your question from a little while ago, as of the end of the year, Warren's stake in Kraft Heinz was $25.25 billion.
And
Jay, 25 billion in that. Holy cow, that guy's got money.
Jay says it's 26.7% in the Google chat. He said 20. That's a big stake there.
It's 26% of Kraft Heinz.
That's what Jay's saying in the chat here. So don't, maybe he's been selling some of it.
No, I think I just was trying to Google it in the background here too as I go. I think he's right. So wow, he still owns a big chunk. So you're, when you're looking at, here selling Kraft Heinz at $60, you're betting against Warren. He's still in heavy.
Yeah. Let's talk Google chat stocks here. John is asking, are they about McDonald's? And
that was down, by the way.
Yeah,
I think we mentioned that it was upgraded. It was downgraded this morning, just to equal weight Stevens. Yes. So it's not a huge rating change, but it is trading down the pre-market. It's trading down $1, and I don't know. Like, what do you think of Mickey D's chart? I mean, it's an interesting setup, and we could not get over 165, which is an issue. And if you look, you kind of had almost like a reverse head and shoulders going on, looking at, at the left, shoulder around 165, and then the reverse, or the ugly head, because there was a gap down there, down like 140 change. And then, the right shoulder kind of formed 165, but it couldn't get back up over there. So it's hard to get interested until this gets up over 165. That's what I'm saying.
It's trading down on just a little bit of volume, but for today's session, I see a print here, 160.80. To me, can it hold the 160, get above and hold 161? Last Friday's low, 160.91. Monday's low, 161.06, which was the low for the week, and a low in that area on Friday. So if it could get up above and hold 161, I think it could shrug this off. Unfortunately, you have really nowhere to hide if this cannot hold 161, because I'm looking at your April 4th low of 157.88. So 161 is my number here in Mickey D's. Also in the chat from Green Mountain, he says he likes Walmart here. I haven't looked at that stock in a long time. Wow.
Same problem I have here, though. People will look at this and say, man, it's forming a nice base at 85. Yes, it is. But it's hung out here so long that I think it's going to take it out. And I think you're going to whoosh the people who have been thinking this is the bottom is in. So just my opinion, I think they've given you a chance to buy the bottom for too long. And I don't think it gives you a chance to buy the bottom for that long. 84 is the low of the move. If we take that out, there's a trade here through all this support. And I think you're looking at it too, because in October, we ran straight up from like 79. I'm looking at October 17, ran up straight up from 79 to 86 in like a week. So we get through that 84, 85, we could be at $80 in a heartbeat. So I actually like the setup better if we take out the support. Support is support until it's broken. But don't you like playing it through that, Joel? If you can get through that 84.5 area?
Yeah, and I mean, if you consider how much the market has come off its February lows, I don't know what hit it back here. I don't know if it was a late earnings report.
No, I think it was. I think it was earnings. Wasn't it, Spencer, the gap down? We're looking in February when the stock went from like 105 down to like 95 in a day. Wasn't that the earnings?
On February 16th? Let me look.
I'm scrolling through the pro real fast. I'm going through my news feed to just kind of get, was there any headlines? Yeah, it was earnings.
Okay.
It was earnings.
Yeah, because it had the price action on the 20th. That was after a long weekend. Dennis is giving
takes out that support, goes to 84. I think it's going to see 80. So at a certain point in time, Walmart gets attractive from valuation perspective. No, I don't think we're there yet.
Not a good trend here. You have 4 lower highs, 4 lower lows, and you had an up close on Friday. So tight ranges too here. So the last 4 highs, it came down to 86.27. So sellers are, really stepping down on price. Friday's low 86.20, or Friday's high, we're trading above that. But looking at a chart like this, you can lean on the low of the move. But if that support's taken out, then you have to decide whether or not you want to hold on for a possible another leg down to perhaps the $80 level. Green Mountain, we haven't talked about Chinese stocks at all, or the Chinese index, FXI. Quiet range is finding some major resistance just above 48. I think for this one, it's a little bit tough for me to be, because you don't know what the next tweet's going to be, regarding China and everything. A little tough for me.
Risk here. Yeah. Headline risk.
And what else we got?
In the chat there, JV Spec wants an HD opinion.
Okay.
HD kind of fits in. I feel like it's the same chart as Walmart almost.
Oh, man.
It's funny, eh? You got two retailers that are completely pretty different retail businesses, obviously, construction versus consumer, products really. But the charts look the same. You go, the big, everybody had to buy everything at the end of January as the everything rally. They sold off, and shook everybody out. But now it's been, coming down. It's kind of in consolidation station down here, but again, hanging out at the lows for too long. And if it takes out 170, then it starts to get a little bit concerning here. And below there, you got a gap down. You've got some work to do, maybe down to 160. I like 160 because this is the level. If you look in 2017, we made a high back in May, and then we made another high back and took it out in September, and then we had the big run after that. But I always say, old support can become new resist, or old resistance can become new support. I love the 160. I don't know if it's going to get that low, but I think I'd be a buyer down there. I don't know here. Maybe you've got a tradable area. It didn't make the low, and you could say, okay, I'm going to trade this off 170. But I'm saying if it starts trading below 170, starts going 169, then I want the hell out. So if I'm trading it and saying I think the bottom is in, and I don't think it is, I want to be out, and my stop out would be anything below 170.
Yeah, 170.42. Interesting how the market has come back, significantly off your February lows, but
and these haven't.
They're trading below their February lows. So
yeah.
Poor relative strength. That's another thing that if the market starts to work against you too, these stocks could even be in a little bit more trouble. And the last one before we do imbalances, BZ Tokyo says FireEye, finally not a lame loser stock anymore. And this one I had for a while. I just couldn't hold on to it. Very, very impressive move, trading up another 51 cents today. Talked about it having trouble at 19 just because it was a whole number. But what do we got? Do we have a ratings change, or is that just trading?
Is there something on FireEye this morning, Spencer?
It's light volume.
Yeah, but it's bid at 19. So that's, obviously the market is helping it out too. I mean, its beta's a little bit more in the market right now. So I just want to make sure there wasn't something there.
Well, they had a PR announcing a partnership with Oracle.
Oh, they did with Oracle.
Yeah, with Oracle. So
there is news here.
That's good.
FireEye and Oracle collaborate on a cloud transformation project or something. So anyway, so there's a headline here. I said on Thursday, I think then this trading around the same price, maybe it was in the 18s. I think it's going to see $20. So I kind of like FireEye still here. I think $20 on the radar.
Nice round number. Did sell off 1908 was Friday's high. We're trading significantly above that. So you want to see it hold just 19s for psychological reasons. If you did get down to the close, you got a double close there at 1871, 1875. So little area, 1875 has been the high close of the recent move. Dennis, let's do some quick imbalances before we dial up Sean.
Bank America, looking at it, 435,000 to buy. Obviously has earnings this morning, so obviously that number is going to change significantly. But early, the early number here is showing some strength here for Bank America. Also General Electric, and I'm not sure if there's a headline on that this morning because it is not trading higher here in the pre-market, but there's 174,000 shares to buy. So GE is an interesting setup here this morning. It's showing some life. I mean, General Electric, here's a different, the difference here between this GE chart and, looking at, Home Depot and Lowe's and Walmart, you could say the same thing. It's ugly. Its relative strength's been poor. But the last couple of days, it's actually starting to show some life and starting to get away from the 1280 low, which is a hard bottom. I mean, 1280 has been the low on this multiple times, giving you lots of shots down there too. It's very hated by the street. If any analyst ever came out and defended it, this thing could pop a buck in a hurry. That being said, it's always prone to negative news. And it seems like every time I try to trade GE from the long side, it comes out with a negative headline and loses, 5 or 10%. So, once bitten, twice shy. I'm always nervous to hold this thing overnight. But simple reason is always seems like when the headline comes out on GE, it's negative.
And that was a strange day on Friday. I remember looking at the 13-18 close and we were talking about it. And I was thinking, maybe if this thing gets near 13 again, might just for a shorter term trade, but never did. In fact, it has an 11-cent gap between 13.25 and 13.36. So someone really wanted to own this stock on Friday, and it was its biggest volume day since April 2nd. So we'll see what happens. 13.68. Of course, we're going to keep an eye on that. That was the high from Friday, and that matches your March 29th high of 13.66. You want to go get Sean?
Yeah, we're going to get Sean Emery. He's with Avory and Company. We'll be right back in a moment with Sean.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick and Spencer Israel working the boards. And we are joined on the line by Sean Emery. He's the founder and CIO of Avory and Company and the author of themarketmeter.com. Sean, how you doing this morning?
I'm doing good. Happy Monday to you guys.
Happy Monday. Well, let's just talk, broad market here, a volatile market in your words, kind of at the high of a recent trading range, seem to be shrugging off the news over the weekend. Just give us your overall assessments of the market. Can we finally bust out of the top of this trading range, or what's on your radar?
Yeah, I think the only way we bust out is following earnings season. If you look at the SEC rule, there's a 5-week period where buybacks there's the blackout period for buybacks. So we're sitting in that window. I've been talking about that for a while now, at least for the past couple of weeks, where you look at the top 25 companies who have been the biggest share repurchasers over the last year. They've repurchased $178 billion of shares in nominal value. And none of them have reported yet. So we're sitting here waiting for them to report. I think we have another couple weeks. Until then, I think we have kind of this window of potential downside. But again, like you mentioned, we're in a range. We've had a series of lower highs from February to March to trying to break out above that. So I think after earnings, once we digest some of the positive tailwinds that's coming through currency, and some other factors, I think we'll eventually take out new highs once again.
Hey, Sean, Dennis Dick here. We obviously got some bankers here. They sold off on good reports. We're going to hear from Netflix tonight. I just want to get your thoughts going into tonight's report with NFLX. Stock has been strong ahead of the report. Sometimes you see that happen, and then they're weak after because they've just run up too much. What are your thoughts here on Netflix as it's going to report after the bell?
Yeah, running up is a consistent story with Netflix. I mean, right now it's roughly like 43% above its 200-day moving average. And I think that just signifies the move you're talking about more so than anything else. But Netflix sits in a good spot. I mean, we've done a lot of internal checks on the name just to measure consumer interest. And you look at search trends for Netflix or Netflix-related content, and essentially all of that is pretty positive. They continue to be the #1 app in entertainment on all app store fronts. I guess one interesting fact is if you look at the Xbox usage, 16.5% of that, it comes from Netflix. So we think eventually they're going to make it into this will become a gaming story. They don't publicly talk about it. Obviously, they're focusing on their core business. But I do think at some point, for the bulls to be correct, I mean, you're going to have to take this platform that they have today, use the levers in terms of raising pricing, use the levers to add new external things like gaming, and use those different factors. But going into this earnings report, I think if you look at over the last 10 earnings reports, roughly 60% of those have been negative. This is actually the farthest one from the 200-day moving average, or the last time that we were this far heading into an earnings report, and we sold off the next 4 earnings reports. So I think actually bulls here are somewhat vulnerable heading into an earnings report. But at the same time, I think there's a lot of consumer habits that are still there, and all those tailwinds remain for the company.
All right, let's move on to a stock that's been in a lot of news here, and Facebook trading up 76 cents here at 165.28. You had the big sell-off down in the 150 area during Zuck's testimony. I think a lot of people are looking for this stock to go back down, and then had a nice rally that day. You still like it here despite the scandal? I don't know. Are you a fan of Barron's at all, Sean? Do you read Barron's Weekly?
I don't read it, but I see some of the headlines.
Well, Tiernan Ray, who I respect quite a bit, wrote a piece how blockchain can eventually be a threat to Facebook, and kind of went into details. I don't know if I agreed or disagree with him, but give us your thesis here on long-term for Facebook.
Yeah, I mean, this is obviously the perfect test of the Facebook dominance. I think that's clear, right? I mean, it couldn't get any worse for Facebook. And I say that pretty aggressively in the way that, I mean, we're talking about elections, Russia, all different types of things that people or investors and even consumers are putting on Facebook's responsibility plate. But if you just look at it, it's the mode, right? It's the ability to capture 2 billion users and 1.5 billion on their messenger platforms or WhatsApp. They have the little Oculus sitting there that's not really doing anything. That's kind of a lottery ticket if they can execute on that front in VR. But if you look at the bigger picture and you actually start to look at digital advertising, it's supposed to grow 40% over the next couple of years cumulatively. They have about 19-18% market share today, and we think advertisers are stuck in a place where as digital grows and as consumption grows, not only in the States, but also internationally with connectivity enhancements and whatnot. And we think that Facebook is going to be one of the biggest beneficiaries of that, even if they have to rein down some of their targeting. We just think that they're going to capture more share in a growing market, and advertisers have to go to Facebook, whether it's Facebook or Instagram or WhatsApp or Messenger. We think that Facebook is the eventual platform for many, or 25 to 30% of digital advertising. So we think from a valuation standpoint, a lot of the noise, again, I think this is the worst of the noise that we're probably going to see. Even though I think there's going to be new things that come out, because I mean, they made it pretty clear that they don't know what's out there. And it was pretty easy, it seemed, for Cambridge to take on some of that data and circle it and then sell it, package it and sell it. So I think we're going to hear more, but I don't think the storylines or the noise around it's going to be as much. And again, going back to how we analyze Netflix and some of the consumer habits, I mean, all the data points that Facebook over in March engagement rose, everything points that their section within social media and photo sharing, whichever app we're looking at, stayed flat to rose. So we didn't see that much internal data that suggested that this affected actual consumer use.
Another stock that you're following closely the story with is Square. This is a stock we talk about at least once a week on the show. It was probably the stock of 2017. I mean, it went from $13 at one point in time, got over $50, and now obviously it's come off those highs here. But SCHW, good Dorsey story here. What are your thoughts going forward? Yeah,
no, it's an amazing story. It's one of those stories where I think we're going to look back in 5-10 years, and a lot of people are going to say I shoulda, coulda, woulda, and that it was all right in front of me. Most people, when they think about it, they think of it as the little point of sale reader on cell phones and smartphones. It's so far removed from that. I mean, just one example of that is their Cash App. If you go in all the different app stores and analyze that, they're the #1 finance app, ahead of PayPal, ahead of Venmo, ahead of all the different competitors. So they're really building out an ecosystem around it. They have the payroll, they have the invoicing, they have Square Capital, which is their financing arm, which is allowing them to give small loans to businesses of all sizes. And a lot of people like to dump this into the small business category, but the truth is 47% of their businesses last quarter, or their purchasing volume was to mid to large sellers. So this is not just a small business story. I mean, I don't know if you guys follow Coachella, but they were the point of sale solution at Coachella this weekend, which is one of the largest festivals out there. So they have this brand about them. They have the execution that the team and Sarah Fryer and Jack Dorsey have been able to accomplish. And I think it's just an interesting story. And it's kind of, I don't know, I like to say PayPal meets eBay meets Lending Club meets Venmo all in one package. And they're executing pretty flawlessly, which is why we've seen the price rise the way it has.
And just adding to that bullish news, Goldman Sachs has come to the App Store. They acquired Clarity Money, and that's a mobile storefront. So it's growing its consumer bank. So I think that bodes well, too, for a stock like Square. Moving on to issue stocks that you wanted to talk about here, or the overall market, U.S. dollar. We do have some rising interest rate environment here. you think the dollar, the rising, strengthening dollar is going to be a negative or positive for earnings season?
It's definitely a positive. It's as the S&P and some of the different indices continue to move internationally. Obviously, more sales international, bring them back. And what we're seeing actually is this so far, right? There's only been around 29, and not including this morning, 29 companies report for the S&P 500, and roughly 20 of those have indicated positive tailwinds from their currency. But we actually think that's going to be much more broad across the board, and it's going to be a tailwind for some of these earnings that are coming out, specifically a lot of the multinationals. So that's a positive. Again, it's moved 10% or so within the last quarter, 14% or so, sorry. And if you actually go back over the last 10 to 15 years, the average absolute move from a quarter to quarter perspective is roughly 5 and change. So we've actually seen 3 times the average move from a dollar standpoint, either positive or negative. In this case, negative. So again, I think it's going to be a positive. And I think it couldn't have been a better time for the market to see a positive tailwind from currency.
We've been on the line with Sean David. He's the founder and CIO of Avory and Company and the author of themarketmeter.com. You can also follow Sean on Twitter at _Sean David. The S and the D are capitalized on that. Sean, great information. We're going to have to get you back on again soon. Thank you.
I appreciate it, guys. Have a good one now.
All right, we just had the Schwab earnings come through. So
Okay.
you wanted those when those broke.
No.
Yes, sir.
They just broke. So Q1 EPS 55 cents versus a 53-cent estimate. Sales $2.398 versus $2.36 billion. So slight beats on both numbers for SCHW.
I know it's trading up here in the pre-market, but let's think about this for a second. You're talking about a quarter where volatility, increased substantially. I got to think that there was more trading in that quarter. I would have thought these numbers would have been better.
Me too.
So looking at it from that perspective, yeah, it's nice to get a beat. Oh yeah, you got the algorithm off the bat that's trading up. It's just 51.77, and somebody just bought. It looks like off exchange order too. So it could have even been a retail trader buying it up at 51.77 here. I think this report isn't good enough. So I think this is something that could go red here. Obviously we're very early here. We're full price discovery mode, so I'm making a bold call. But I would have thought these earnings would have been better. So I'd be skeptical buying this on this report.
Big level to keep an eye on here in Schwab, SCHW. You had a high on Friday at 52.60, still a stick away from that. That coincides with your April 5th high of 52.74. So I keep an eye until it clears that major resistance. Could be some pressure coming back on the downside. And I mentioned this before the earnings came out. A lot of lows under $50, 49.78, for example, 49.93, right there, 49.74. So a lot of lows here, but let's see what happens. See if you really have to clear 52.70 today.
Jump over here just to a couple other stocks that were talked about over the weekend. We had 60 Minutes featuring Allegiant Travel, not in a good way. They sold the stock off hard ahead of the report, ahead of the 60 Minutes segment, because obviously market found out that was going to be on 60 Minutes, and it's never a good thing when you're on 60 Minutes. 163.30 is where it opened on Friday, closed at 140, or it went down as low as 149.50. It's losing another $8. I did not watch the segment here, Spencer. I'm not sure if you got some details on what was said, but it's down another 5%. So I'm assuming nothing good was said on 60 Minutes.
Just to clarify, sometimes it is good if you're on 60 Minutes. Square, Jack Dorsey had a very nice profile.
Did he? Okay.
Yeah, a few years ago, they had a very rosy profile of Dorsey on how he runs Twitter and Square and yada, yada, yada. I didn't see exactly what was said on 60 Minutes. I was traveling, and I didn't get a chance to watch the program. So if anyone got...
I got to see a little bit of it.
Okay, what
were they talking about, Joel?
Oh, man. What's the last thing that you want to hear about when you hear about an airline, when they're talking about it? What's the last thing?
Airlines flight safety issues.
Exactly.
Oh man, I was flying last night.
No, flight safety issues?
Yeah. Yeah.
Oh, that's a killer.
Yeah, and you know what? I mean, I don't have a fear of flying, but I never really thought about it. I've done a lot of traveling with my kids, my girls, and they just hate it. So now I'm like, every time, get some turbulence, I'm like, hey, that's nothing. But, everyone has their flight stories, to talk about. But, they're talking about smoke pouring in the cabin. They're talking about abortive takeoffs. They're talking about aborting landings, much higher. I mean, nothing good. So not only am I not buying the stock today, I hope I never have to take the airlines because it was just very, very, very negative. I'm not going to short the stock off this news, but 140.92. That is your pre-market low. And what did you do? You're below your February lows. Man, you're way down here, Des. You might have to help me find support here. I can't find any support. I see a low in November at the 126 area, but there has to be some daily levels somewhere.
Man, I got to let the dust settle on this.
Yeah,
and because this is just when you get flight safety issues, you don't know how damaging this is. I'm looking at the analyst commentary after the report. Buckingham says 60 Minutes report was damaging, obviously. Thanks. I didn't see it, but Allegiant shares under pressure, says Citi. Horrible publicity, says Stifel. Analysts or Allegiant TV report had more teeth than expected, Citi says. So you got the analysts all chiming in, not saying anything good about this. Let's let the dust settle because this thing's in free fall here right now. No pun intended. And I think we got to let the dust settle.
Yeah. I mean, I'm just never, not one to react to news. If I was short this thing, got anything off on Friday, you got a nice windfall there. But listen to this, Dennis. It traded on Thursday. It traded 86,000 shares. On Friday, it traded 1.1 million. So,
well, everybody, elite, like obviously people find out, what's going to be on 60 Minutes. They're like, oh, what are they going to talk about? And obviously, airline on 60 Minutes is probably not going to be good. So that's why it sold off so heavily ahead of the report. But I guess it was really damaging. So it's selling off heavily after the report too. So this is not like sell on rumor, buy on news. It's a sell on rumor, sell on news. It looks like this morning.
All right, you are getting a little bit of a bump here in the S&Ps. 35 minutes ahead of the open, we are creeping up towards that high, that pre-market high of 2677.50. To me, it's all about Friday's high at 80.50. Your March 27th high was up there, so there's your key to 2700. Taking out Friday's high there.
Bank of America is almost going red here now too, so keep an eye on that. Ooh. I think it's going to test Friday's low. And we'll see how it responds there at 29.56. So caution here. Bank of America trying to go red. A lot of your banks are actually turning red here again. So there could be some follow through selling pressure. We'll keep an eye on that sector.
All right. Let's take a look here. Do we cover all of our ratings here?
No, Costco caught an upgrade.
Okay.
Costco caught an upgrade at Wells. It's trading up almost $3 here in the pre-market. Upgrade to Outperform. Price target $220. You know what? You think about all of the retail stocks and how they're all struggling here. And we know, well, not all of them, I guess, but you think about Walmart's struggles here. Costco's stock is still holding on fairly strong. I mean, we're not far off from the all-time highs. We got up there almost to $200, 199, 198, or 199.88 there on February 2nd. We're not that far off. We're $7 off. I don't think we're getting there. There's a lot of. It's gonna be a tough sledding as you get up to 195 and above because people, there is a lot of trades that have occurred there in the last few months above that area there. So I think it's tough sledding as you go higher. But it's breaking out through the 190. So I think there's room to 195 now.
Yeah, let's see what happens at 192 today. That's 60 cents away. I can't chase this thing up $2.50 on not much volume, but you did have a pair of highs at $192 area from March 5th and 6th. That's only 60 cents away. So that could be a target if you had a long position overnight or looking at some options. Above that, if it can really keep going, 192.99. That was your high for March, made on March 1. But nice pattern. It just broke out. It just did it overnight on an upgrade.
Jump over a couple other ratings changes. TPX, we didn't talk about this one, and this one is interesting because it's downgraded to sell at Loop Capital. Did they give it a price target here, Spencer? TPX? loop on this one? I thought it was on in the 20s.
Didn't see one when I looked.
Okay,
but
I'm gonna go. I thought I saw it go by.
I looked like an hour and a half ago, so I'm gonna need to hold on a second.
$36.
Yeah, it was 49. Now it's 36.
$36 stock. This is one that looks like it's hanging on a cliff, and now you look like you're going to get the catalyst to kick you off the cliff. So stock just been hanging out near the lows. The low of the move was 43.48. That was on April the 2nd. We're going to take that out here this morning because this is downgrade to sell. People do follow Loop Capital. They make some bold calls. Stock is down $1.50 in the pre-market. I think this thing's going to see $40. Maybe not today, but that's where your next support level here is. And I wouldn't even be surprised. TPX is a wild one. It could even see it today. 39.57 was the low back on April 21st of 2017. That's the next big support. I don't see nothing in here. There's a trade in here. I think it's down to 40.
Yeah, 39.57. Dennis mentioned that April of 2017 low. It's trading down $1.62 on light volume, but Dennis mentioned, this is a pretty thin one, so trades under 1 million shares. Friday, I mean, if it ever goes into rally mode here, you had 2 lows at 44 and then 2 closes right at 44. So if you get some kind of relief pop, 43.75, 43.80 could be a good exit point. If not, support looks light. Ed Parker's asking if there's any news on Light, LITE, trading down 680. There's got to be
something.
Boom.
I have not seen anything on Light this morning.
Really?
Got to be something. We're gonna go hunting here too. I'll hunt.
Hunting.
Not even
hunting. Got to be something big on it. LITE. And I'm trying to look. Commerce bans US. I don't know actually. I've got to get 2 more days because I don't follow the story close enough here. But when you see something down this much in the pre-market, down $6, it's got to be something going on.
But boom, 56.25 to your pre-market low, a low at 56.20 and 56.55. Potential area support, but once again, without knowing the news, it's hard to chase. And big gap in here, some serious selling. I checked the news here, and it's also dragging down some other stocks in the sector as well.
Well, if you look, like you got ACIA, Acacia Communications significantly down, and LITE and OCLR. A lot of those stocks all similar. So I'm not sure. Was there an Acacia news? Like that Acacia Communications down 20%. ACIA.
That's got it. Whew. Holy mackerel.
No, nothing there that I'm seeing either. And I'm looking all over on a few different wires, and I don't.
Gotta be something said somewhere on these things.
Decent volume here too. I mean, this is all the way back at the low of the move, 32.27. What was our low here? That's below the low of the move of 33.68. Boy, this thing's in a heap of trouble here.
Reuters is saying something about Commerce, and I don't follow the story, so this has got to be it. Commerce bans U.S. companies from selling components to ZTE, which is Chinese telecom equipment maker. And I think all of these companies sell stuff to them. So it's some type of ban coming, commerce bans coming, and this is what Reuters is reporting. I'll just read it to you again. Like, commerce bans U.S. companies from selling components to ZTE Corp. for 7 years for violating the terms of sanctions violations case. I don't know what the hell that means, but they've got all these stocks listed in there too in this report. Reuters, ACIA, talking about LITE, Finisar. So that doesn't sound like good news.
All right, one quick one here. BPMC for DC1, that's trading down $8 here. Is there any volume? I mean, they kind of walked us down. There is some volume. I got to check the news on this one. BPMC. Wedbush maintains outperform on Blueprint Medicines, raised the target. There must be some other news out on it. Trying to find support here. Pre-market low is 89.50. And can I find anything to coincide with that? 89.32. That was your low going back to April 6th. So you better hope it holds in there. All right. With the S&Ps at the highs of the pre-market session, up 20 handles. Let's just end on a good note here, Dennis, and have Spencer preview tomorrow's show.
Yep, tomorrow we're going to be joined by Nick Shaheen and Matthew Golden. He's another trader. He's a new guest, and he'll talk us through his trading strategy on tomorrow's show. But that's it for us today, folks. Thank you to our guest, Sean Emery. Thanks to all of you who joined us in our chats on YouTube and premarket.benzinga.com. PreMarketPrep.com. Hope you all have a good rest of the day. We will see you folks on Tuesday. Have a good one.